Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we'll be having an interesting session, trying to understand the key market events that we are expecting this week. So we'll put our focus on the most important events. Then once we are through with that, we majorly focus the technical analysis and try to understand the key market developments and price levels that we may expect to see in the markets going forward. So before we make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi in the live comment section, and these will confirm that everything is working just fine. So hello, Jimmy, and thank you for joining the session. So let's get things going. So we're beginning with a focus on the key highlights in the markets. Hello, Charlie. Thank you for joining. So there's this article on Yahoo Finance, basically summarizing the key events that we will be expecting to see in the markets this week. And this basically covers everything that we're expecting this week. So stocks closed out last week, hovering near record highs, as one of the busiest weeks of the quarter is set to greet investors. And that week is basically this week, and this is when we'll be expecting an explosion of reports that might impact the direction of the market for the next week or even for the next couple of weeks. So first things first is the Magnificent Seven, and these are the top stocks that made a very strong rally last year. And now they are bound to report earnings this week. After we got two last week, one of them was Netflix, which reported better than expected revenue, earnings, and as well as a number of subscribers. That led to a very strong rally in NVIDIA stock. So second one was Tesla. It didn't do well. It missed the earnings expectations. Revenue, the same, and it gave a dim outlook for full year 2024. That explains why we saw Tesla sing last week. So this week, we'll be expecting to see top companies reporting earnings, and this includes Apple, one of the biggest companies in the world. We'll be expecting to see Google or Alphabet earnings. We'll also be expecting to see Microsoft, Amazon, as well as Meta Platforms, which is the mother company to Facebook. So, and all this is said and done. That is, the companies report earnings. Then the expectation is that we will have quite a volatile market, especially in US equity indices. So we'll be expecting to see volatility coming in the NASDAQ, S&P 500, as well as the Dow Jones. So combined together, all of the companies that will be reporting earnings this week, we will be expecting to see a market valuation of around $10 trillion. That is, the companies reporting this week have a combined market valuation of $10 trillion. So this might cause some big impact. So among the companies in the S&P 500, there are about 503. 106 will be reporting their earnings this week. And this includes 6 components of the Dow Jones Industrial Average. So we know that the Dow Jones doesn't have many companies. It has 30. And if 6 are reporting this week, then the outcome of the 6 earnings may have a big impact on the direction of the Dow Jones Index. So in this case, we expect to see some volatility coming in there. So on Wednesday afternoon, the Fed is set to announce its latest policy decision. Overall, the markets are expecting that the Fed will not change interest rates, that it will leave them in the range of 5.25% to 5.50%. So out of traders and investors will be following the meeting after that, which is the FOMC press conference. That's Wednesday at exactly 10:30 p.m. when the Fed Chair Jerome Powell will be presenting at the conference with focus on where interest is headed, when the Fed might be starting to cut interest rates, and the conditions, that is the economic conditions that might lead to that. So that's very important market right now, and would be the key driver for the US dollar. So we could be seeing increased volatility for US dollar pairs. And as a result, whenever we see volatility in the markets, then it brings in momentum and, of course, potential trading opportunities. So on Friday, there will also be the US jobs report. And this is also important. Remember, every first Friday of the month, we get the US non-farm payrolls. So this one is also expected to bring volatility, and unemployment is expected to remain flat at 3.7%. So that will increase the potential momentum in the markets this week. Besides that, we also have another report coming in from the Bank of England, where the Bank of England is expected to make an interest rate decision on Thursday at 3 p.m., where it's also expected to hold interest rate steady at 5.5%. So the OPEC meetings will be proceeding this week. So we will be expecting to hear an update on the OPEC projections for the year. So whether they decide to continue cutting oil output, maintain the same level, or to expand. So this will also be key in the markets. So 1 p.m. on Thursday, we'll also be getting inflation data from the Eurozone. Then later on in the week, that's when we see the US non-farm payrolls. So don't forget that Australia will also be reporting its inflation. And this will be on Wednesday at 3:30 a.m., where we expect CPI year over year to have dropped to 3.7%, down from the previous reading of 4.3%. So clearly, it's a quite volatile week, with the exemption of Monday. So today is largely a quiet day. So the only news we are having is New Zealand trade balance, which came in early in the morning, which improved to negative 323 billion New Zealand dollars, down from a bad position of negative 1.25 billion New Zealand dollars. So we'll be expecting to see CB leading index from China at 5 p.m. and a loan office survey for the US, and this is tentative, meaning that it could happen at any time. And that is not expected to impact the markets. So for any currency traders, know that the key focus for the week will be the UK, Australia, as well as the US, where for the UK, it's interest rate decision. For the US, interest rate decision plus the FOMC press conference. And for Australia, it's the inflation data, as well as the Eurozone will also be getting inflation data. So for indices traders, we know that we are focusing on the earnings of these top companies, and we'll be going through some of the top companies reporting earnings. Then for commodities traders, I think the key highlight of the week will be the OPEC meeting and how it impacts the oil market. So some volatility is expected for both Brent oil as well as the WTI or US oil. So besides that, looking closely on the expected news for the week, Monday, the Dallas Fed manufacturing activity, don't expect much. I think for earnings, this is where we have real activity, ranging from AMD on Tuesday, Alphabet, Electronic Arts or EA. We have General Motors, JetBlue, Juniper Networks, Match Group, Marathon Petroleum Corporation, Microsoft, Pfizer, and Starbucks. So I want us to try and classify them because I think there's three major classifications to really focus on. So one of them is big tech. So when we talk about big tech, we're talking about AMD, Google, Microsoft, and so on. So when you see all of them reporting, including Apple, MasterCard, and so on, then in that case, you have an understanding of the trends happening in big tech. So second classification is biopharmaceutical companies, which will also be reporting this week. So one of the key companies to focus on, it will be Pfizer, the company that came up with the COVID-19 vaccine. It did not do any well last year, so we'll be trying to follow through with that. So we have MetLife, Then later on in the week, in the industry, we'll have, I believe, one more company should be just checking. So we have HCA Healthcare, Pfizer, and Merck. Yes, this is the one that I was missing, Merck. MERCK also be reporting earnings this week. So the other classification I want you to think about is the companies in the petroleum industry that will be a big report for investors who are trying to bet on energy this week. So one of the companies that will be reporting in the energy industry will be the Marathon Petroleum Corporation. That will be big earnings on forecast. We have the Hess Corporation. Then later on in the week, we'll be looking at just scrolling fast to get. We have Chevron Corporation as well as ExxonMobil Corporation. So these companies are involved in oil exploration and distribution. They did do really well, but in 2021, 2022, there were some of the top performers in the market. And focusing on their earnings this time, that is for December last year, it might give us an insight on where the sector is headed, and investors will be considering these earnings while trying to place their bets for 2023. So it's a big week with a lot of activity, so that will be a key focus point. So I don't think there's anything else. So just trying to see if there's anything else I missed. All right, nothing. So we skip through and get to focus on charts. So we're starting with the dollar index, which was pretty strong last week. Tried to drop on Friday, but then managed to make a recovery. So if you look at the forward chart, you can see it was all noisy last week. So with a big jump upwards, then down, then up, down, slightly closing higher than the beginning of the week. But then if you count the number of weeks for the first 4 weeks of trading in this year, this is where we started at the beginning of the year. And since then, the dollar index has been consistently higher. So it is within expectations that the dollar index will continue trading higher against other currencies. So with a strong dollar, what we are seeing is a good rally against the Japanese yen, which basically we saw the Bank of Japan last week decided to hold interest rates steady, continue with the policy of ultra easy monetary policy, and as a result led to investors believing that the Japanese yen will continue losing to the dollar. So from the forward chart, this is how it looks like. So when you think about how this is performing, then you can see it's a clear return movement after the yen had strengthened in the later months of last year. But since we started this year, it has only been one direction, and this is basically the dollar gaining against the Japanese yen. So each and every week, we have continued seeing the dollar gaining against the yen, and now that we are seeing some form of pullback, then it might imply that we are headed for a potential trade higher. So investors will be looking for cheaper prices to squeeze in more bullish positions. So we have a trend line here, trying to map it here. So this seems to be the prevailing trend line. Then on the lower side, it seems like the market was moving downwards, but then it's now actually moving upwards in what now looks like a potential diamond formation. So if you're very new to trading, I think it's time you start looking for that particular pattern called a diamond. So it's usually something like this. So you see the market expanding this way, and then all of a sudden the two trend lines change. And this is often a consolidation pattern where the market is trying to determine a direction. So in this case, a breakout would give us a very strong direction for the USDJPY pair. So from the 1 hour chart, it seems like, as we speak right now, the market is simply just jumping from a key level support area, and you can see the trend line here. So if the market was closed with this candlestick just as is, then it might indicate that we are headed higher for the rest of the day, having bounced from that support. So it might be an idea to start potentially hunting for bullish positions on USDJPY pair, especially after the close of this candlestick. So for Euro USD, we continue seeing the euro weakening against the dollar. So we know that the ECB last week decided to hold interest rates steady and is looking forward to holding rates higher for longer until inflation behaves as projected. So until inflation gets the 2% target, the ECB is considering holding rates higher. However, if the Fed is also looking to hold rates higher at 5.5%, the euro is at 4.5%, then this creates a potential difference, and it leads to funds outflow the Eurozone to the US, meaning that the euro continues losing to the dollar. So as a result, you can see this increased market activity. We opened with a gap downwards. Market attempted to close and is now continuing. And for a short-term Monday intraday trade, then the easy target is to go for this bottom that we saw Friday. So it seems playable and it's happening. So there's a good likelihood to squeeze in some pips here. So for pound USD, I think it's a similar case. So despite the expectation that the Bank of England will offer guidance later in the week, what we are seeing in this market is more of a sideways. If I was to plane my chart here, zoom out, and then we try to understand what's happening here, it doesn't seem like much. It seems like a market is simply holding this area as a resistance, and the support levels seems to be moving along this trajectory. So it's more of an ascending triangle. But then if you highlight this area here, then you can see that it's more of a sideways momentum. This has lasted roughly 6, and now we are getting to the 7th week. So nothing much is happening with the pound here. So it's more of a sideways momentum. So if you go to the 1 hour chart, now if you the highlight here, just to make things clearer, then you can see that this was the prevailing pattern as per last week before breaking out. And now from the lower side, it seems like we had some support playing along those lines. And in the last days of last week, which is Friday and Thursday, the market was unable to form higher highs. So it kept on weakening. So being unable to form higher highs means that the dollar is pretty strong. So it's reasonable to expect the market to dump towards this trend line here. However, this activity hasn't happened yet. So it's important that you basically look for some form of patience, wait until the market gets, let's say, to this lower trend line before making any decision. So as we progress, you should know that these sessions are not investment advice, and they are purely educational. So you always have to do your own research, make your own decision, and of course, practice proper risk management. So, hello, J-Squad. Hello, Rosie. Hello, J-Squad. Thank you for joining the session. Is it true that the Kenyan government is billing in USD instead of cash shilling? I think I saw something like that, the internet, screenshot that was posted for a license. But then I don't know whether that applies to Kenyans or foreigners working in Kenya. So I really don't have the fact for that. So hello, Willibet, Mana, Robert, Wilfred, and Lemuel. Thank you for joining the session. So let's keep on going forward. So for USDCAD, you can see that the Canadian dollar was pretty strong against the US dollar. But then the dollar being pretty strong against other currencies means that the strength hasn't died out, and there's a good or reasonable expectation that the dollar will pick up from these bottoms here. So in the last 2 weeks, we have seen the market test the same level as a support level and fail to break twice. So came in down here at 1.34 and 26, failed to break. Attempted to break again on Friday, failed, And now there's this expectation that we would be seeing the market now heading for a rally. So this was the first test here. Second test was right here. And now you can see the dollar moving downwards against the Canadian dollar. So if this keeps on playing out, the idea is to look for a potential bullish position here if the market was to retest this area. So else, if the market bounces from this level and heads higher, then it might make sense to start hunting for opportunities today, though I don't expect the market to be that volatile today. So you can already see it's more like the market bounced from this area, went high, and then pulled back. Now to test this area, and we would be seeing the market bouncing from this area. So a bounce from this area could mean now we trade higher and potentially target Friday's high, which was somewhere within this level here. So as for gold, pretty strong direct and bullish momentum. So last week we heard out of anticipation that after breaking the support level, that gold would continue down and get to its bottom. Eventually got to the lowest price here. This was around $2,009 per ounce of gold. But then the market changed direction and started moving up, got right back to pattern. Now it's headed higher. So since morning, we had a big spike higher. Market went back across the gap and is now continuously moving higher. Of course, now the new target is the previous high, somewhere around 2,037 dollars per ounce of gold. So it seems like a market that is losing the bearish momentum. So you can see here the market was continuously forming lower lows. And now comparing with the previous low, now we are seeing a change where the previous low of last week was higher than the previous low the previous week. So as a result, now there's expectation that the market has turned and we might be headed higher from this point onwards. So looking at this trend line, it's clear that the market is heading for the trend line and the coincidence of last week's high. So potentially getting to $2,037 per ounce of gold. So the momentum is expected to continue for the rest of the day till maybe we get to this area. So for AUDUSD, this is a ranging market. I don't think there's anything for us here. Market is moving sideways. We are not yet at any of the extremes. We are not at the top and we are not at the bottom. So it's more being patient and waiting for things to happen. So as for US equity indices, we're expecting to see higher highs, especially coming in from the earnings that we're expecting this week. So clearly, looking at the price action as per the last couple of days, Wednesday, Thursday, Friday, then it's pretty clear that this market is forming some form of flag, and all you have to do is to wait and trade the breakout. So this is the upper side of the flag. Of course, the lower side of the flag is following a path along here. So at some point, we expect to see a break. Notice that in the previous low, that is the low that we saw this morning, the market didn't go for a lower low, didn't get to the lower trend line. What we saw is the market rejecting lower prices at around midnight and then jumping higher. And now we anticipate that the market might even break this trend line and move higher as we head into another all-time high. So remember, the price that we saw on Wednesday was an all-time high for the NASDAQ. We would be seeing yet another all-time high this week. So in this case, there is increased bets that the market will retest this and move higher. So in this case, for any equity indices traders in the house, we know that this is a nice target and a potential extension of a new leg higher. So for US30, we've already mentioned that 6 of the 30 companies that form the Dow Jones will be reporting earnings this week. So after this 5-day range, the market managed to break towards the upper side on Friday, pulled backwards, and now would be headed higher, looking to get into another all-time high. So in this case, I expect to see the market gunning for this area yet again. So US 500 also are getting into some form of consolidation. So this is the consolidation. So the highs are following that path, and the lows following this path. So it's more of a weak channel, continuously moving upwards. So as a result, the expectation is that once the market gets to either of the edges, then that's when we start looking for opportunities. So Brent oil has hit the target. We discussed this triangle last week. Market managed to break here, and our target was $83.677 per barrel. And as I mentioned, this week we have the OPEC meetings. So the idea is now to start tracking price movement from this area here to see if there's a continuation higher or if the market attempts to make a pullback. So in this case, I will be very observant of this area to see any form of developments. But for now, the volatility seems to be dead. If you look at the relative size of candlesticks last week on Friday versus today, don't have much activity. So it makes more sense to be patient and wait to see if the market breaks or reverses from this point onwards. So I think that's a key decision point. So already you can see signs of market reversing and back downwards, but the candlesticks not big enough to get or to warrant an entry. So France 40 index also did the same thing, managed to break a previous resistance level. So if you check here, you'll notice we had highlighted various resistance levels. So market managed to break and move higher, and now we have already hit target. The target was that the market would test this area here. So now this week we try to understand whether the market will be headed higher to form a new all-time high, and that seems more likely than not. So in this case, if the market happens to break Friday's high, then we continue trading higher. So for the Euro stocks cash index, this is the forward chart. So the market managed to break a big trend line that was holding, and this was since December last year. So after breaking the trend line, we had a very strong rally towards the upper side. So we go to the target. Target was the base of the pattern here, 4,592. But then that was not the stop. The market kept going up. So in this case, with a very strong momentum, if you count the number of candlesticks here, you will notice that the market has had 1, 2, 3, 4, 5, 6, 7. So 7 straight sessions of gains, clean gains, and nothing has changed fundamentally. So there's a good chance that the Euro 50 cash index will continue trending higher today, and it's reasonable to place bets once the market breaks Friday's high. So Bitcoin managed to break this pattern, retested and continued moving lower. So we expected to see a target hit of that 7,954, but then the market resumed bullishness before getting to the target. Now we have seen the market retest this trend line here. So now trading at $42,030 per Bitcoin. The idea now is to try and observe price action around this area to see what might happen going forward. So it's either of two things: the market broke, retested, moved down low, went back up, and then retested the trend line again and go further back downwards. But then if the bullishness is strong enough, then a break inside the pattern would imply that Bitcoin is now headed for 46,198, and that would be an impressive rally for Bitcoin. So for New Zealand USD, a very strong bounce from this trend line here. So after finding support here, dropping twice, and then getting right back into pattern, basically implies that the market might be headed higher from this point onwards. So it seems like the New Zealand dollar is finally taking its stand against the US dollar. So notice the support areas here. The 2 times the market attempted to go down and failed. In this case, you can call this a double bottom. Now we are attempting to break the neckline. So the neckline is this top here, the area where the market has been able to break. So now we are headed right to the neckline. So on the short run, I expect the market to hit this level, but then on the long run, if we break, then an acceleration higher. So similar analysis for US oil as well as WTI. So after breaking the trend line, it seems like it's the same thing. Market got to this area. Now we might be seeing a pullback. So I think it's easier to trade one and not both. Then we look at USDCHF. Now we are seeing the dollar losing to the Swiss franc. Then there's an immediate support level right here. So once the market gets here, then we'll be observing the price action. Try and understand whether you get a clean break or a bounce. So expect the dollar to start recovering early this week. So as a result, even if it's losing to the Swiss franc, I expect the dollar to resume strength once we get to this level. And if that plays out, it would mean that from this area, now we start looking for bullish positions, targeting much higher prices. So that's it for the day. I'll be trying to check if there's any questions. So if rates are held by the Fed, will it play on strength and direction of the USD? So the market is already anticipating with a 97 to 98% probability the Fed will hold rates at the current level. So in this case, I don't think there's a discussion about whether the Fed will hold rates or not. It's expected to hold interest rates at the current level. So the issue that investors are concerned about is when the Fed will begin cutting interest rates. So that will be a big question on the FOMC press conference. So the other question will be by how much? If you're cutting rates, are you cutting by 25 basis points or by 50 basis points, by 75, and so on? So the third question that we will be looking to answer this week is what data is the Fed looking at before making an interest rate decision? So we will try to understand what data has more weight. Is it the PCE price index? Is it the US jobs data? Is it the manufacturing data, and so on? So that will be a key point in trying to understand what the Fed will be presenting. So hello, Nixon. Hello, Ice. Hello, Jimmy. Hello, Apollo. Are options maturing that may force of market direction? Yes, whenever there's options maturing, of course, somebody has to cover. So in this case, it might impact direction. I'm assuming you're talking about Bitcoin, because there has been a lot of news that there's a lot of options that will be expiring this week. And if Bitcoin doesn't get to $50,000, then there's a good chance that they will be worthless. So as a result, we could be seeing increased market activity this week. So we've already covered Brent oil. So I said it's similar with US oil. We've covered USDCAD. And if you came in late, just give yourself some time. Once we end the session, the recording will be available on the YouTube platform. Hello, Joseph and Sinbaz. So thank you guys. Thank you for your time. And I hope to see you on the next session. I think the only asset I haven't covered is the FTSE 100 or the UK 100 index. So a clean break here. We have a clean break. I think now we are headed higher. So it's still lagging compared to the other indices, but there's still more room for upside. So as we engage into this journey of recovery, following the big sell-off that we saw in the earlier weeks of January, I think we will be seeing the FTSE 100 index also go for an all-time high, similar with other European equity indices. So there is a good chance that this might as well be the trade of the day, as the market now heads for a new all-time high ahead of the Bank of England interest rate decision. So thank you guys, and see you on the next one.